Thank you everyone. Thank you Krishna, thank you Gaurav, thank you Rohit. So we have a pretty interesting panel today. We have discussed a lot about manufacturing opportunity, but everything ultimately starts with capital. So here the focus is on capital, and would love your insights. So starting with you, Krishna, you are at the intersection of wealth and uh, public markets and private markets. That is where you operate, because you are a large wealth management firm, as well as a firm which is directly involved into taking companies public, arranging private equity, and so on and so forth. So would love your perspective on something very fundamental first. Basically, when any company starts, entrepreneur starts thinking about, I have to scale. How do I go from 5 crores to 50 crores? Or if it's a 50 crore company, how do I go to 500 crores? If it's a 500 crore company, how do I go to 5,000 crores? So the question never really changes. So, and critically, how do I fund that journey? So would love your perspective on what is required from a capital standpoint to take this journey, how to prepare.
Very interesting. First of all, good afternoon, everyone. Before I dive into the answer of Mrigang, good afternoon, everyone. And I want to especially thank Mrigang, you and Ritesh for giving us opportunity to be part of JITO. With me, I have my team members also with me, my colleagues, Rahul and Shivangi here. During the network event, they will also connect with all of you. Just to going on to your question, Mrigang. So first I want to give you a perspective about what I feel, how I see manufacturing as the thing. Then, because majority people are from manufacturing, I think it will make a lot of sense if I'll give you that perspective. So if you structurally see, there are two economies. One economy which is very regulated from manufacturing perspective, and second is deregulated. So if you see regulated economy में क्या होता है कि you focus on forex as your major reward. Second, you focus on scale. And China is the example for this. And third, you keep the local demand less so that you can focus on exports more. That is how it works. And in a deregulated economy, you focus on profits. You focus on scale, but scale तब करेंगे जब profits manage होगा. Profit को छोड़ के scale पे focus नहीं कर सकते. And forex is just an anchor to the inflation. These are the two ways of looking at economy. तो एक economy में manufacturing सही है और एक economy में mutual fund सही है. This is how it works. So coming to this, I think मुझे लगता है कि जहाँ पे, because there are 2-3 things. First you bring labor, then you bring skill, then you bring innovation. If you see China also, China's growth story, China's thought process, first they started doing outsourcing, then they started building skill, then they started innovating. Now they are known for innovation. BYD is a big example, DeepSeek is a big example. I think you will have a lot of perspective on that. So a lot of things are happening on those lines in China and this thing. So मुझे लगता है कि when you see things, when you innovate, when you build skills, then only you can build large organizations. Then it makes a lot of sense in raising capital, building capital, and all these lines. This was my perspective towards this capital.
Right. And Gaurav, just to take this question forward, how do you work with all global investors? So you work with private equity firms, you work with large M&A acquirers. What do they look at it? I mean, one is obviously they are looking at market, but what beyond the market opportunity they are looking at it? How do they evaluate companies? Which one to acquire, which one to leave? Which one, where you see diligence being succeeded, which was diligence actually failing? So what are the core things that they look at?
Sure. Yeah, thank you, Mrigang, for having me here. So I represent Transjovan Capital. We look at M&A and private equity very closely. And to answer your question, what is the lens with which an M&A acquirer looks for? Which opportunity do they find suitable? So it depends on what is the underlying motivation. It has to be strategic for an M&A acquirer. For a financial investor or sponsor, it can be more driven by growth considerations. Is it an exciting sector to be in? Now, if I look at from a strategic acquirer perspective, some of the key things that they look at or motivations around why they find some target suitable, why they may find something else not so suitable, is driven by what am I gaining or what am I buying into? So am I buying into capability, in which case the company has to have certain specialized know-how, certain specialized skill sets, which are missing in this ecosystem or which are in an adjacency to the strategic buyer. If I'm looking for acquiring market share, which is consolidation, then my motivation will be more of scale driven, which is how much of the revenues is the company sitting at, what kind of top line, and what are the revenue synergies I can stand to derive if I'm a buyer of that business. Third motivation could be regarding cost synergies, which is that I am backward integrating. I am looking at sorting my supply chain. I believe as an acquirer, I can derive greater strength around building a moat by getting deeper into my supply chain or capability side, in which case the cost synergies and the supply chain capabilities come into play. What is, let's say, buy versus backward integrate kind of play. Now, if you look at where deals don't get metallized even after getting the identification, metrics right, because let's say we work with a lot of large industrial majors, some of the names that were shared earlier. So this includes even Fortune 500 companies, this includes some of the large Indian industrial conglomerates across a variety of sectors, but predominantly in manufacturing if I qualify and in the industrial sector, right? So if we shortlist, let's say from a long list of 20 potential targets, and we have to qualify 6 or 7 shortlist, then what makes the first amongst equals is also the softer aspects around it, which is governance, which is quality of management, goodwill, which is beyond the numbers itself, ease of integration, how the company are being run in terms of cultural integration, because these are issues which can crop up later on. So numbers is something any auditor can tell you, provided they are transparently reported. But beyond the numbers is where the red flags tend to emerge, and which becomes a distinction between first amongst equals if I have to have a short list of 6 targets and say this one company or 2 company is my go-to target.
Got it, got it. So just in case if some of the investors, some of the entrepreneurs sitting here, if they have to invest or if they have to acquire the businesses, these are the things that they would also want to look at. Similarly, if they have to sell their businesses, then they have to focus on software aspects as well at the same time. Those are
True.
super critical. Understood. So Rohit, coming over to you, you have dealt with the acquisitions at Cognizant. So Rohit heads M&A and corporate development at acquisitions. So they acquire companies globally, and Rohit has been involved in several acquisitions. So give me an example as to, first of all, how do you approach the acquisition? Not from a strategic angle, but let's say, you have identified a company and what is the process like? And second is, what happens post the acquisition?
Thank you, Murgank. And thanks everyone for having me. I've spent significant amount of time in the entire M&A life cycle, starting from sourcing some of these targets, looking at it from very critical lens around due diligence, and that due diligence has multiple different aspects around it. One is, of course, the commercial due diligence, the financial due diligence, the legal due diligence, the HR aspect, which is really getting to the bottom of what do people think about these integrations, both on the acquirer side as well as the acquisition companies. So across multiple dimensions, we do very thorough due diligences. And then we really then get into this whole discussion around strategic purchase agreement, negotiations, and the deal gets done. But more the real difficult part around M&A is, as Gaurav pointed out, is largely in the post-merger integration or the value creation or capture of that. So when we think about M&As, we are really looking at broadly 2-3 things. One is, what does this M&A will do to us? Meaning, why are we acquiring this in first place? Is it a capability build out, or is it something that we want to use as a mechanism to enter new geographies, new regions, or build something which is very differentiated and we don't have it, right? So capability or access to markets, or in some cases it could be completely different that we haven't done. Those are the lenses that we look at it from overall the positioning of that M&A itself. The entire process is sourcing, due diligence, and then the value creation and value capture of this through the post-merger integration. And it typically involves multiple aspects around, within post-merger integration, you look at how we commercially align them into our organization, which means that essentially they will have their sales teams, they will have their marketing teams. How will they align with the acquirers' marketing and sales teams? How will their systems work with our systems, which means they have a CRM system, they have a ERP system. Will we have two different systems? Will we have a consolidated view of this? So all of these become the real nuances and the real pain points during the integration process. So I can talk a lot about it, but in the interest of time, I'll restrict at this point.
Got it. So we talked about capital. We talked about softer aspects of capital. We talked about hygiene, governance, and how inorganic growth can play an important role in growth of your own companies, or if you want to sell out because of any reason whatsoever, that is like a pretty viable option. Now, there's one fundamental tension which I always come across. I'm myself run a private equity fund, and I get a very important question which at least I have not been able to convincingly answer. So let us use our panel to answer that question. I am running a company. So there's an entrepreneur who comes and tells me, I am running a company. My profit is 100 crores. And this guy is running a company. His loss is 100 crores. His valuation is higher than mine. How is that possible? So Krishna, if you can just...
it's a very, very interesting question, because मैं भी काम कर रहा हूँ. So when we were working with Edelweiss, so we were making PAT of almost 400-500 crore, and companies who were burning money, we used to think क्या चल रहा है. And he knows, we were talking about this. So just to give you perspective, guys, I think behavior is very important. When any company comes, they work on behavior pattern, they create new markets, they work on technology, then things completely change from a PE perspective and investment perspective, because something which doesn't exist or something new coming out or some new market is being created, the scale is very, very huge. And PE companies want to invest into such companies which are thinking big. Their aspirations are big. They want to build something, build big in their ecosystem, in their thought process. And of course, whatever example you see on startups, you will see that they have done something on those lines. And sometimes, for example, I'm a renewable company, and I am making a solar panel, and I'm importing my cells from China and putting that and doing it. It will always have though I will be making profits. Or I am some auto part company, maybe a lot of people from here, but you're not scaling it, doing 2 or 3 auto parts, and you supply 2 or 3 manufacturers. It will not make sense. Maybe you are a profitable company, but you are not building scale or new market, new technology. Unless until we will not do that, we will never get valuations. If you want to chase valuation, we have to innovate, we have to work on technology, we have to create new markets. Then only this thing is possible. Otherwise, we will always in this dilemma कि ये क्या चल रहा है? मैं तो profit कर रहा हूँ, ये तो burn कर रहा है, फिर भी पैसे ले जा रहा है. This will always be a dilemma. Thank you.
Gaurav, your perspective.
Sure. So, see, I think, it's largely because we have to also see what is the basis of valuation. So value is a function of not a point function, but a time function. What I mean by that is, at that very point of time, the company which is making 100 crore profit and the other company which is making 100 crore loss. If you look at just that point of time, you will have, favorable opinion about the profit-making company. But because it's a time function, so one has to look at the potential that it holds. each one of them. The 100 crore profit-making company may be in a market which is either marginalized, the moat may not be there, it may not be sustainable, or it may not be high growth. Hence, investors may not value it as much as the seller may want to think about it. On the contrary, the one which is making 100 crore loss today may have a very favorable future outlook, which could be thanks to the category it is in. It may be a category like EV, as we know, component side. It could be data centers, very high tailwind sectors, penetration play. They could be growing at 100% category itself. And if company has one of the head start into that sector, it could be a beneficiary. It will be a natural beneficiary of that itself, right? So given the investment is done with a forward view of at least 3 to 4 years, what is more important is what you can do with that canvas, not just whether I have a blank canvas or I have a colorful canvas today.
And Rohit, any additional points? You are in technology sector where this happens a lot more. And this is also one of the points which I hear, that a lot of entrepreneurs, particularly older ones, they say that their children, they want to start AI company. They do not want to run the profitable business. And that is, and I'm in Gurgaon. I'm based in Gurgaon, where automotive ecosystem is most mature. And second generations are coming. And I get this question all the time. So any responses?
Yeah, I think it is more to do with the, one is of course the timing aspect, but more importantly, the types of businesses. If you look at your digital technology AI businesses, they typically are high fixed cost, but marginal replication cost businesses, right? These businesses are, they have a lot of network effect in themselves, right? They have platform dominance. So the investors really value three things. They value the market potential, the growth potential, and third is the competitive moat. If you are able to bring these three things together, and they also value unit economics around it. Growth only is not going to be very attractive to investors. So growth is important, but not at the price of unit economics. So if you bring these four things together, unit economics, market growth potential, overall business itself, then it becomes a very compelling proposition. Look at Amazon, for example. I mean, Amazon as a business, and another key point is the optionality. Optionality is a very critical point that a lot of people miss. In a typical business which is growing at a modest rate of 2-3%, is a mature business. But they have lost this optionality. A business like Amazon was able to start from a book to a cloud company, to an ad company, and now a logistics company, right? The optionality increases the entire market canvas itself for themselves. And the investors then look at it from overall market that these companies could capture. Therefore, platform businesses are rated and valued very differently as opposed to a traditional business, which may be growing, but essentially the growth is modest.
Very interesting. In fact, if you look at closer home, maybe let us look at Pune, and let us look at Aurangabad itself. In Pune, we have Bharat Forge. Now, the company has started with the forging for automotives. Now it has become such a large strategic defense company. It is getting into aerospace, and that is why it gets premium valuations. So as a multiple of its profits, it sometimes gets higher valued than the OEMs themselves, because they have always been able to get those get that options as Rohit talked about, and they have been able to execute. Look closer home. Look at Endurance. It's a 31,000 crore market cap company. We, in my previous job, we were investors in Endurance, and it went through hell. It went through very difficult time. 95% of the revenues were coming from one customer, Bajaj Auto, two-wheeler supplier. Then they did acquisitions in Europe before 2007. Then global financial crisis came in, and the company required more capital. But what happened was they were able to get best four-wheeler customers globally. So they were able to get German customers, Italian customers, and over a period of time, it has diversified. So it opened the geographical market, which several other companies could not open. So that is the option which they exercised. That's the risk which they took. So it was not easy for them, but then they have grown. A company from Aurangabad has become like a 31,000 crore company, and it appears that they also do castings, but they are doing it with a difference. They are doing it in a different way, and that is why they also get premium multiples as well. So very interesting perspective. So thanks so much. Now, in terms of scaling dilemma, we talked about capital. What are the other important aspects? And I want to basically touch about talent here. So Krishna, how do you think about it? One question that we typically get is professionalization of businesses. We as a Jain community, we build businesses for generations. So it goes from generations to generation. But when I hear investors, they talk about getting professional management in and all of that. How do you think about it? And what would be your advice to some of the entrepreneurs sitting here?
So it's a very interesting thing because I also come from a business family, and whenever we discuss and when I tell them about this, I think it's very, very important to bring profession in the organization. In fact, if you make any decision, if you're managing your wealth also, you're managing your business also, when an external person comes and he puts the professional team and he thinks very differently, because you have a certain thought process, because times are changing. Sometimes we don't adapt with the time very fast. But when a person comes from external thing, he is on toes, he has to give results, just review it properly. I think people somewhere go wrong, they hire professional, but they don't review it properly, they completely rely on them. I think there they generally go wrong. But whenever you hire professional team, get external things from outside, I think what they can build is always be next level. That is always my perspective on this.
Gaurav, your perspective on this?
So, see, I think, obviously it's better to have professionals, and I think it's also important to have distinction between ownership and professionalization, right? Generally in board governed companies, or as we see in listed IPO companies, that's the norm. But even in unlisted space, even in, let's say, family generation driven business or family owned businesses, in India, there is an aversion. Generally, we have seen that, the ownership and management tend to be mixed up, which ends up detrimental for shareholder value creation. But look towards West, or look towards even Far East, right? I think you spoke about Korea, right? The entire system of family-run conglomerates. It's only possible at that scale. Think of groups like Samsung. Think of groups like some of the biggest German, French, Italian companies. The ownership is still held by family. Many of them are not even listed, and yet they are run by professional CEOs, CFOs, and the management has been empowered to do it. Now, what defines or what makes the difference here? I think two things which come to mind. One, professionals not only bring expertise which is outside in, because they have been in the industry in various other companies, which someone inside out, like a promoter or the next gen, may or may not necessarily be able to translate. Secondly, I think it's also about accountability and the cost of failure. If a professional is hired to do a particular KPI or a KRA for a particular 1 year, 2 year, 3 year annual operating plan, and they miss it, they know they can lose the job. But if you are yourself the promoter, what is it that you're going to do if your plan doesn't work out? There is no disincentivization for yourself, So effectively what it ends up making is there is value erosion without you even realizing it.
Yeah, but if I were to just play a devil's advocate, Facebook is run by, even if we were to look at like West, Facebook is run by Mark Zuckerberg today. He makes all important decisions. Amazon till very recently was run by Jeff Bezos, and in case of Google it is a little bit different. But these are founder-led companies, which have scaled great heights. So what would your view, Rohit, be on this?
So, see, I don't look at it between founder and professional run businesses, especially the platform businesses. The traditional businesses, of course, there is this divide, but the new modern age businesses have to be thought through in the lens of essentially what capability, because again, it really talks the difference between the old age businesses or the new age versus old age businesses is largely the pace of change or the acceleration of change. Now, if your modern companies have leaders who are really adept at moving at speed, because moving at speed is really critical in business, right? In the older businesses, you could still afford some lack of speed in decision making. But in newer businesses, you need to have very sharp, agile decision making processes. And therefore, it is important to have people who can make those decisions really quickly. Because in Amazon, we had this whole concept of one-way door versus two-way door. A one-way door decision versus a two-way door decision means that in a two-way door decision, you make a decision and you can still come back. That decision can still be given to someone else. A one-way door decision is where a decision is made and you can't come back from that decision. So therefore, you need speed and agility in new age businesses. In the old age businesses, of course, I agree to the fellow panelists that essentially you need professionals who can bring fresh thinking, new ideas, challenge the existing teams to really innovate and take the business to the next levels. In the modern businesses, it is about who has the right thinking and the vision to really execute on how to because you don't even know who your competition is, because the space is very fluid. The space is so gray, you don't know whether NVIDIA is your competition or Amazon is your competition or someone else is your competition. So therefore, you need visionaries. And therefore, it's important to realize that people who can lead through that ambiguity are the right people to lead you in that business.
So basically, in terms of one important takeaway, as I basically filtered through all that you said, one is capability is important. So if the family member is capable and all of that, that is probably Rohit, that is something that can be looked at. But if the capability is not there, then obviously the professional has to come in. Second, Krishna, you made a very important point, and I will just rephrase it. It is basically trust, but verify. Put a verification process in place, and trust is what people do while professionalizing, but verification process is missing. So that is essentially where the challenge is.
I have just one more thought on this, Mrigank, that as a leaders, I mean, you all are leading your businesses. We have only two major tasks. One, keep identifying good talent. Second, your talent, keep grooming them. If you'll keep doing these two things now, you will be unstoppable. That is what my learning is as a leader.
Got it. How much time do we have, Ayushi? Okay, we have 5 minutes. So maybe I'll ask one question and then we'll open it to the floor. One question, Krishna. From a practical standpoint, let's say we have a 100 crore business or 150 crore business, revenue business. We want to scale it. What are the avenues available for capital? Should we go for IPO? Should we go for SME IPO? Should we go for private equity? Should we borrow from friends and family? What should we do? I mean, how do you think about it?
So this is also an interesting question, because when we go and meet a lot of our clients, they also keep asking us, "Ki Krishna, kya karna chahiye abhi?" Because we are reached to a certain threshold in our turnover. Should we raise money? My simple answer to them is that, sir, jab tak you don't need actual capital, don't do it for status. That socially मेरा status बढ़ेगा, मैं लोगों को बोल पड़ूंगा मेरी company की valuation ये है. I think if this is the reason, I think this is a very shallow reason to get and to raise any capital. But I think when you need any expertise, you want to get list, you need some addition in your talent, then I think PE can be a good idea, because PE comes with a 5-year exit thought process, but they add a lot of value in your business. They come with a lot of expertise. Like someone also in the morning was saying, I think Ajay sir was saying, mentioning somewhere in the morning session that when PE comes, they add a lot of value in the organization. I think that is the right way to look at the PE. When you need some expertise, guidance, PE makes a lot of sense. But if you don't want to dilute your equity, you are okay to keep patience for long. I think bootstrap is always a great model to have. And if you really want to win, as I mentioned, if you are innovative, you know that your market size is big, you are going to reach great high and really need capital without of these any social status reason, I think it makes a lot of sense to then go and raise the money. And your business should be very niche, that you know that हाँ ये मैं बड़ा कर लूँगा यहाँ पे, this business will become big. Then it makes sense. बाकी socially लोगों को दिखाने के लिए या evaluation create करने के लिए doesn't make sense. एक और चीज़ होती है कि whenever we get list company ना हमको लगता है कि वो actual aim है to reach that stage. But actual game starts after listing, because investors become active. You are very you have to go and answer to the investors, mutual fund companies, everyone, audit, regulators, everyone will come in the picture. You are accountable to everyone. So it only changes the orbit, but things will go to next level after listing and after IPO. I think we should think twice, 10 times before going for IPO. If you need PE and you need some addition, I think PE is always a good idea.
Got it. So now since we have limited time, the floor is open for questions. Yeah. Yes, sir, please. Can you take the mic there? If you want to stand up and introduce yourself as well.
Jai Jain. My name is Ayush Kataria. My question is to Rohit sir. I'm working on a healthcare startup in the AI sector, and I'm looking into the possibilities of AI in manufacturing. From what I have researched, sorry, it is mostly up to supply chain and decision making. I wanted to know your insight into what else can AI do in manufacturing, not only in automation, but anything else that we youngsters can put value in.
So my simple answer is just stick around. I'm going to take a session on this specific topic.
Okay.
Just immediately after this. Just stick around.
Sure. Thank you.
Anybody else? Any questions? Yes, ma'am. Sorry, there's a light, that's why we can't see you.
Very interesting session, and I am from Mumbai, and I work in the space of corporate governance. That's my special area. Being a company secretary, I've been helping a lot of businesses on the complete boardroom transformation. So my point and my question to, I think Gaurav, you spoke about governance as a very important, factor, especially when there are mergers and acquisitions. Lot of times I've seen businesses, saying कि जब बड़े हो जाएंगे तब governance पे ध्यान देंगे. So what is that right stage of governance कि आपको कब उस चीज़ पे ध्यान देना चाहिए? और एक governance एक छोटे mid-size business 100-200 करोड़ के लिए क्या है जो family governed है? तो उसमें वो governance का importance क्या है? If you can throw some light, thank you.
Sure. Yeah, that's a very interesting and pertinent question, because generally speaking, governance does not come naturally. The thought of governance or thinking about it outside of profit-making enterprises is not a natural occurrence to many businesses unless they are ready for a liquidity event, which is onboarding a private equity or going for an IPO, etc., right? But if you ask me from the perspective of what is the right stage to start thinking about it, I think governance goes hand in hand with integrity, So any startup guy also, someone who just started 0 to 1 journey, should also think about governance is in as much light as someone who scaled, because governance is a foundation pillar for the business to stand on. Now, governance doesn't necessarily mean that you need to have a board of 6 people, have 5 independent directors. Right? That, of course, depends on the stage of the company. Who are the right people who can look at external governance or have a framework around it? What I'm talking about is governance could even be having certain soundboards, certain boundary conditions to poke holes and challenge in the workings, in the systems, in the processes, and the culture, and the operating model, right? Now that could be even as simple as forming the right committees, which are not necessarily driven or chaired only by the promoters. So it could be as simple as that. Let's say I have a 20-member team. I'm founder or promoter. Business is just doing about, let's say, 10 odd crores, right? I'm a MSME company. Traditionally, governance would mean that I will wait for, maybe I just look up to my auditor, and just go up and have those meetings outside of statutory audit and say, okay, what should I do, right? So that's how familiarity is what promoters tend to look at. But familiarity should not be the basis of governance. It should be actually looking in the unfamiliar domain, which is someone who's not vested in your interest, who's not getting paid by your business to do audit. It has to be independent, and it has to be someone who can be objective about your business.
Thank you, Gaurav. Do we have more time, or we have run out of time?
I have one question, sir. Hello, I have one question to Mr. Krishna. You were discussing about the IPO, and coming to the platform of the manufacturing, there are many methods of investment plan. Disbursement from the government, disbursement from the banking agencies, when you are in the growing trend of the business. And you need the money to enhance the business. So currently, before 10 years or 8 years, the IPO system was a failure. But last few years, I see the IPO...
Sorry, I'm skipping few words. I'm skipping few
Can you listen?
Yeah. I'm skipping few words. Can you just repeat again?
I repeat again. Yeah. We are discussing on the IPO, the platform of the IPO. As the manufacturing, lot of mechanism is to enhance the business by taking the different mechanism of the loans, etc. But IPO is the market and a credibility output which we are generating from the normal person based on the reputation of the company. So currently, before 10 years, what we were seeing, the IPO was not a good thing. It was a failure. So many people cheated the normal public. But last few years, I see the IPO mechanism is increasing trend in which many companies are grown up very nicely. To name the few company, I can say Amber is one company whose IPO has done fantastic. Then Dixon is there, which has done fantastic. Now PG is doing fantastic. These are all air conditioning company. But I see a IPO is becoming more trend of growth to the self-industry also. They're returning back also, but we don't know what is the returning trend back. So in the current scenario, if suppose somebody is developing on the profitability also, developing on the growth of the turnover also, is IPO a correct mechanism still?
So I'll just tell you, every time there is a certain sector which are favorite. For example, in manufacturing, currently 4 or 5 sectors are very favorite right now. Defense, electronic manufacturing, data centers. I mean, these are few things which are very, very interesting right now. Renewables. There are a lot of action happening in this, on this stuff. And a little bit on automotive parts also. This action. If your business into these lines and the current market is favoring to these sectors, make a lot of sense to come up with the IPO. And if you have a turnover, you have a good governance, it makes a lot of sense. But if your sector is not in a flavor right now, it's time to wait, maybe manage it with debt. Don't go for IPO right now because markets are not favoring it. Every sector has their favorite market flavors and things like that. So you have to wait for right time. I think that will be very, very important in this. So you have to just keep checking which sectors are doing well. You have to keep identifying good investment banker who will keep working with you for the right time. Do all those things. Keep working on these things. It will make sense. Don't be in a hurry. If you're able to manage it with debt, manage it with debt. If you're able to manage it with little bit of small P, manage it with that. But don't hurry for IPO. Timing is very, very important in IPO markets. That will be my point.
Thank you so much, Krishna. Thank you so much, Gaurav. Thank you so much, Rohit, for all the valuable insights. And thank you, everyone.